Let's look at Apple reports tomorrow after the close, and this is the last, really major S&P 500 component. It is the major S&P 500 component to report here. And, a lot of people say, hey, guys, can't you just bring on somebody who doesn't kind of see things the way you do or this? I see no other way when you look at this Apple chart. And, you've drawn plenty of lines on the next charts, the next few charts we're going to see here. But it just looks like it's a one-up, down 2 or 3 risk reward.
There's that feeling, right?
Yeah,
I'm with you. I don't know if we have an iteration with no lines, but I mean, basically, again, this is subjective, but you do see some sequencing here. We might have also, now, I didn't make those fit. Go back and forth, the percentage decline, and then the channel, put them together. Okay, so what do we know? Can it punch higher? Could it always go through the line? Yeah, but we know we have a big move back to a difficult level where overhead supply starts to come into play. And how to play it. Is this the kind of thing with fresh new money? We should bet big here? I don't think so. One could say, yeah, but Meta gapped up on its earnings, got re-rated higher. So did Microsoft. Why wouldn't we bet the same thing? But here's what's so interesting. After getting re-rated higher, notice there's no follow-through. So I think the risk reward is always risky to be short here, and then it pops a bit on earnings. But we've come a long way. It's a mature intermediate move, mature in terms of magnitude, some 38%, mature in terms of duration. It's almost 5 months in the making. And what? Take profits, trade, make calls, do something.
35% move off those lows from January. Guy, if I said to you, with the stock trading here at 170, with the all-time high at 180, okay, and you and I can be in agreement, for it to get through 180, you would need the most epic beat and raise out of this company. You would need to hear something about some new product that people have never heard of, and we know that they don't do that on earnings calls, and we know that they are rarely ones to introduce a brand new product, that sort of thing. You would need to hear stuff about China that we just wouldn't expect, about the tremendous demand for the iPhone 14 and this and that or whatever. None of that's happening, okay? Like, it's just not going to happen. So my question to you, Guy, given everything Carter just said and looking at these charts, with the stock at 170, the 170 puts that expire Friday, okay, so a day after they report, are trading at $3.30. That is basically 2% of the stock price, okay? And again, we started the show with a 9% gap lower in AMD. We're going to talk about the 8% or 9% gap lower in Starbucks. And granted, those are pimples on Apple's ass, okay, when you think about in terms of market cap. But that just seems too cheap to me if you're looking to kind of protect a long position or make an outright bearish bet.
166.5-ish, you break even. Obviously, if you're right in that trade, the vol's going to start to work for you as well. So those options will get more valuable with the subsequent move, and it makes a lot of sense. I mean, it's obviously, listen, it's a pretty binary trade. You know your time horizons, but you also know it's going to happen pretty quickly because Apple does move post-earnings in a pretty significant way. So if you're so inclined, I think that's on risk reward, I think that's a great trade. And I know Doug Cass has been talking about, I think, adding to his Apple short into earnings as well. And this chart speaks to exactly that. I'm not a hater. Again, Apple doesn't really impact my life all that much one way or another. Yes, I have a phone. And quite frankly, and Dan, I think, would admit to this, I could easily live without it. But I'm in the minority. I get it. But by any metric you look at, literally any metric you look at, Apple's expensive in this environment. And I understand their cash hoard. Here's the one thing that could get it through to the upside. If by some miracle, and it would be, that services revenue is north of 22% of overall revenue, then I think the stock will get a re-rating in terms of valuation. But I just don't see that happening, Dan.